Hi everybody, Dan Stefels here with Royal LePage Compass Estates. Excited to talk a little bit about what's been going on in the market. Are we expecting to see some significant price changes in the future, or is it going to be going down as a market? Are we going up, or are we going to stay steady state? Well, the devil's in the details. Let's dig into some of that right out the gate to start with. First off, October this year versus October last year. So last year's October numbers were already challenging. It was at the beginning of a really, really tough market within Niagara here as far as quantity of sales happening. But a couple of the things that jump out right away. Average price and average sale price were significantly different last year versus this year. We were at almost $800,000 last year and just over $700,000 this year. So we'll talk a little bit more about it in a minute about why that is and what impact that's had, but that's kind of a key statistic. Another really important statistic is how long those sales are taking to happen. So last year we were looking at only 26 days. This year we're looking at almost 2 months, 55 days on the market. So all over the news you're going to hear about buyer's market, seller's market, balance market. The brass tacks about how that works and how we calculate those, what is defined as a balance market or a buyer's or seller's market. We have so many listings currently on the market. So right now we are at 2,333 active listings on the market. If there was no new listings that came on the market, and the same number of buyers that have been in the market continue to purchase, it would take us just about between 4 and 5 months to sell all of those units. Obviously, theoretically, but that's how long it would take to sell all of those houses. When we sell houses quickly, obviously that's a seller's market. When they take a long time to sell, it's a buyer's market. Balanced is where we existed for many, many years, decades even here in Niagara. We only went through a bit of a stretch there where we were in a strong seller's market. For instance, in Toronto during the intense, crazy period, the days on market were less than a month. We were talking about a couple of weeks on the market. And then as we move into the kind of balanced market is where we can do more things like have financing inspections and have home inspection conditions. And you need to sell your house in order to purchase, what they call a sale of property condition. All of those things become more possible. So we moved into that balanced market. The trend lines and the indicators are telling us that we might even be moving more towards a buyer's market. And again, we'll talk in a little bit about what that actually means. In Niagara, the number of listings and number of sales that have happened from last year versus this year, again, we're down as far as quantity of sales go, about 700 houses, give or take, year to date, last year October versus this year October. So again, that has also an impact on the price point. The last area of the statistics kind of dig into right out the gate are going to be what Royal LePage calls carriage trade. So that's anything over $1 million. So last year, you'll see the number we had was over just about 1,100 sales that happened over year to date, over $1 million. And this year we're just under 600. So again, a significant number of houses that have been bought and sold, but much more at the kind of the middle and lower end of the market as opposed to the higher end of the market. So when you talk about what has an impact on 800,000 versus 700,000 purchase price, that massive gap is going to be not entirely, but largely dictated by the number of $1 million plus listings that have not happened, or sales, that have not happened. So that's the data. That's the statistics. What's underlying that? What is the data telling us? The big question, of course, is: are we going to see a continued decrease in price point? Are we going to see an increase, or are things going to stay the same? Well, when I talk to the real estate agents that I do a lot of deals with down here in Niagara, I talk to lenders, I talk to lawyers. Very few transactions are not coming together on close. So what does that mean? That means that most people who are buying homes down here in Niagara are actually completing the sale. There's a lot of fear-mongering in the media about all these deals not happening, not coming together. We're not seeing that down here in Niagara. Down here in Niagara, people buy houses and they're following through on the purchase. Another thing that's been a significant change over the last period of time it's a lot of end user purchases. We're not seeing anywhere near as many multi-unit purchases that are happening by investors. We're seeing a fair number of that investors converting houses into multi-unit, but not purchasing multi-unit. And so the impact on that again is our rental market, there's a significant impact on the rental market, but from a purchase and sale perspective, transactions are happening because people are moving into them. They're owner-occupied transactions. And owner-occupier transactions typically have a lot more stamina, staying power, and they're much more likely to come together. There are a number of things that impact the price of homes in the real estate market. Absolutely. Interest rates being a significant part of that. The appetite for the supply and demand for homes. One of my personal beliefs is that the most significant area of influence is the media. So when it comes to the print, online, television, talking about problems in the real estate industry is typically a self-fulfilling cycle. When you say that there's going to be problems, that's what people talk about, and it becomes a problem. The reality is, back in the 80s, interest rates were 2 or 3 times what they are now. People still bought and sold homes, and they still, carried along and lived their lives. What we're seeing right now is a significant increase versus what we had over the last few years, but we're coming back up onto a 10-year average. So when you look at this chart, we look at the interest rates from many years ago being incredibly high. We've just kind of now coming back to the median. We're coming back to what the 10-year average is. So our expectation is that the Bank of Canada is going to make some small changes up and down for the next year and a half. We're not going to see any significant moves. And what that means is the steady state of interest rates. It's going to cost what it costs to carry a mortgage. I think we've seen the influence that those rates are going to have on prices. So we're not going to see a significant up or down change in prices. The other, of course, big thing is the number of new Canadians that come in every year. With immigration really ratcheting up, we're seeing a significant number of new Canadians coming to the market. A lot of them are coming to Toronto. And what happens down here in Niagara is the new Canadians come to Toronto, they want to buy homes, they want to buy condos. The folks that are living there are moving around the horseshoe. So they continue to move around from Etobicoke, Mississauga, into Hamilton, Burlington, down here into Niagara. So we see a significant influx, we continue to see a significant influx of buyers coming from out of town. We see a significant number of new homes continuing to be built, and the demand for homes isn't going to go away. The more new Canadians come into the market, the more people need to buy homes. Thanks so much for watching our video. Feel free to like and comment below. We're going to have a lot more content coming on our page as it relates to real estate and real estate related activities. Thanks so much, everybody.